y'all. So today we're talking about the Bitcoin ETF. We're talking about the ones that already exist. So there are Bitcoin ETFs that have been accepted. They trade futures, and in some cases, I believe they also do calls and puts. But we're talking about the Spot ETF as well, what it means for retailers, what it means for institutional investors, what it means for you, what it means for me, and a good analogy as to how to look at what any of this means, because it's all a bit confusing. But we're learning together, we're sharing together, and we're growing together, and we hope to grow our wealth as well. Stay tuned.
Who benefits the most from this? If an ETF's approved, beyond the ETF provider themselves, who wins?
Institutional investors.
What's up, y'all? Welcome back to Urban FinTech at the G Spot Studios channel, where we try to make finance and technology sexy. I'm your girl G, and today, y'all, we are talking Spot Bitcoin ETF. We are talking the ETF futures of Bitcoin, and we're also doing a great analogy of what this really looks like if we think about it sort of in layman's terms, and also a video we're sharing today with you from Bloomberg. It is a bit older, maybe a month old or so, and so it has some expectations and predictions, but we're currently living in the space and time that they had projected sort of these different outcomes. Use that information, those projections, based on real time, what's going on right now. Formulate your own opinion, and let's get this money, baby. So these are the top 6 Bitcoin ETFs as of November 2023, and this is based on Forbes, one of their advisors. And so just to keep in mind with what these ETFs are is that they are like baskets for buying a mix of investments in one go. But in this case, they're related to Bitcoin. So right now, these ETFs can't actually hold any Bitcoin itself. They're strictly just sort of making investments based on future expectations. And so there are future contracts that have been approved as the first Bitcoin ETFs. And this is a kind of agreement to buy or sell Bitcoin at a specific price in the future. It's a way to bet on the future price of Bitcoin without owning it. And currently, Bitcoin ETFs can hold these, but again, they can't hold the actual Bitcoin itself. And so that's what these newcomers are wanting to do. They're wanting to get their ETFs approved so that they can actually hold the asset of Bitcoin. And so again, based on Forbes advisor, they're saying that currently Bitcoin ETFs can only hold Bitcoin future contracts or stocks of companies and other ETFs with exposure to cryptocurrency. The Security and Exchange Commission, or the SEC, continues to evaluate whether it will ultimately approve ETFs that own Bitcoin directly. And so that's where we're at, waiting on the approval of these new ETFs that have been presented to the SEC. And so the Grayscales, the BlackRocks, and such. And I think there's about 20 different Bitcoin ETFs that have been put forward for approval. So it talks about, to help you understand this new corner of the ETF universe, Forbes advisor, they reviewed the Bitcoin ETFs currently available for trading in the United States and filtered them by total assets under management, or AUM, assets under management. And so you'll see here there are 6 listed, and a breakdown of each of their market caps. ProShares ETF BitTO, you have ProShares Short Bitcoin ETF BitT, you have Van Eck Bitcoin Strategy FT ETF, you have Valkyrie Bitcoin Strategy ETF, Simplify Bitcoin Strategy Plus ETF, or MAXI, and then you have Global X Blockchain and Bitcoin Strategy ETF, which is also known as BITS. And so the Forbes advisor listed these 6 ETFs according to their assets under management. And as you'll see, the first is ProShares with $904 million under asset management. And then you also have the ProShares Short Bitcoin ETF which they don't do a futures. And if you look at that chart, it looks really bad compared to the ProShares BitTo ETF futures contract. And this is largely because they do calls and puts. We have VanEck Bitcoin Strategy ETF, also known as XBTF, and they invest in Bitcoin futures, and their chart looks pretty darn good. And so they have assets under management marked at $45 million. And then just scrolling on down a little bit more, we have Valkyrie Bitcoin Strategy ETF, and again, good looking chart, $25 million under asset management. And again, they are third on the list. Simplified Bitcoin Strategy Plus Inc. ETF, also known as Maxi, $22 million under asset management. And again, they have a strategy for Bitcoin futures. And then we also have what is called Global X Blockchain and Bitcoin Strategy ETF, or BITS. $11 million under asset, and they do Bitcoin futures and blockchain stocks. And so their chart looks a little bit more volatile, but again, these are the top 6 based under the assets under management. None of the 6 ETFs that I mentioned on this list own actual Bitcoin. So they don't own any Bitcoin. Instead, they hold Bitcoin futures contracts, and in some cases, the shares of companies and other ETFs active in the cryptocurrency space. And so again, these are future contracts, and thus they are an agreement between two parties to sell a particular asset at a future date for a specific price. They allow traders to speculate about how prices may move in the future with minimal upfront investment because they frequently use leverage or borrowed money. So here's how it works. In the case of ProShares Bitcoin Strategy ETF, or BitTo, the fund buys positions in 1 month. This is the CME Bitcoin futures contracts. As the contracts near expiration, the fund gradually sells them and buys longer dated contracts. And so they keep doing that back and forth. If the price of BTC is rising, then BitTo uses its gains to add to a pool of funding held in cash and treasuries. If the price of BTC begins to fall, then it takes the funds from the pool to pay for the losses on future contracts. So think of it as, if you've been to the casino, you know what a dice game is. If you've been in the hood, honey, you know how they shoot craps. Think of it as a person who has the dice is an owner of the Bitcoin. So being able to hold and shake the dice and make your bet means you directly own that particular Bitcoin asset. And so you can do what you want, you can make wagers, you can bet against yourself, whatever it is, right? But for those who aren't able to touch the dice, and so you're just side betting on the table, you're betting on the 4, 5, 6, you're betting on the, the double 12s, or you're betting on 6, 8 all day, whatever it is, you're side betting, but you don't actually own or hold the dice to be able to make to be able to own and make those like larger gains, I suppose, because you are just on the table, on the side, doing your betting, not directly in control of the dice. And so you're not directly in control or in ownership of the Bitcoin. And so the article goes on to say that most of the Bitcoin ETFs included in this strategy, they note that by attempting to earn money opposite to BTC's price moves, the ProShares Short Bitcoin ETF, or BITI, follows a slightly different strategy. So none of these approaches are perfect. Tracking the price of Bitcoin doesn't always replicate the performance of the underlying market, and there are extra costs as the managers roll forward the future contracts that they're buying. Again, all the hype and hoopla around this Bitcoin ETF approval is coming from the retailers. It's coming from the industry and businesses, and so this could be huge for the Bitcoin front. And ETFs that own Bitcoin directly, again, this is something that is being put forward. It doesn't exist currently. We're waiting for the SEC to make a decision on this, and they're still thinking about whether to allow this to happen, where it's not just futures contract trading, but that people can actually own and invest in it. So in simple terms, right now, a Bitcoin ETF can hold agreements to buy or sell Bitcoin in the future, and also shares in companies that deal with Bitcoin. So you can deal directly with the company that deals with Bitcoin, but you don't own it directly. You are sort of secondhand, again, side betting, if you will, on the crap table. So the SEC is still deciding if Bitcoin, an ETF, can hold actual Bitcoin. And so that's where we're at with this. Let's take a look at the Bitcoin market and where it stands currently today. And so at the time of recording this video, we were at about 36,000 in Bitcoin, a little bit above it. And it's a few hours later since I took that screenshot, and we are up to $37,266.23 per Bitcoin. So it has gone up since then. It looks like overall it's down $229.36 on the day, which is about 0.61%. And so Bitcoin has been consistently leveled off. So Bitcoin has turned into a stable coin, honey. Because the prices have not been fluctuating as much as they usually do, which is good. That means the volatility is not as rampant as it usually is. And so this is good in terms of just the buy-in, understanding that Bitcoin does have value, obviously, because it is holding its value currently in the state at $37,000. Let's take a look at a video regarding these Bitcoin ETFs that we're looking to get approved. The Spot Bitcoin ETFs. Those are the ones where you own it yourself. You got the dice in your hands. You can bet, you can shoot, you can do all of that. So let's take a look.
The institutional wave is coming, but it really can't come until we have very simple, regulated products available in the market, and this is a bit push forward towards that.
And that's exactly what Fractal's all about. I mean, a spot ETF is pretty basic at best, a futures ETF too. You're thinking about options offerings. You're thinking about how you can get basically traditional finance, the TradFi world, to see what they can do in normal finance and bring it to crypto. How easier or slower process is that?
That's exactly right. It's a slow process only because it's taken so long for us to get this to this first base with the Spot ETF. But to your point, once we get the Spot ETF, it's going to be so much clearer for us to be able to give access. You saw Coinbase, CME, who are all able to trade futures in the United States. And that took a long time for that to happen as well in the States. And so you're able to see a path forward for us to really be able to offer not only options, but structured products in a regulated way that institutions are comfortable getting access to. It's really very exciting.
And I second that notion. I think it is very exciting. And I think we're on the trajectory to have this sort of crypto space happen the way that it was intended. There are these different things that are taking place, whether it be political, financial, regulatory sorts of things. But the fact that we had a Bitcoin futures first is a huge deal, because it states the obvious that there will be some kind of future in Bitcoin. Bitcoin is here to stay. You can bet and trade and do different things on it based on your future price point target of that asset. And so to start off with a Bitcoin's future, I think was very strategic. I don't know if a lot of people peep game, but I certainly have. And so now the next step is to have direct ownership. And with the institutions being the key players in this second phase, that's huge. This is us again at the crap table with the dice. We own it, but it's small money around. Now we're waiting for the big money. We're waiting for the long money, right? The old money. So then instead of betting $5, $10 on each roll, now we can bet 50, we can bet 100, we can bet $200. With those institutional players, that brings in that type of money, honey. So we are excited about the Bitcoin ETF. I'm sure there'll be more volatility and other things to happen in the market, but I think that this is a strong indicator that this is something that is here to stay. So, shouts out to Bitcoin, shouts out to you. Let me know what you think in the comments below. Sexy news or no? See you next time.